Greetings, market rebels. Welcome to this week's macro measure combined with the sector situation. It is Friday, August 15th, 2025. The bell just rang, so it's a minute or two after 4 p.m. here on the East Coast. Here's the Trusty Rebellion, Market Rebellion disclaimer. Here's the Trusty Market Rebellion intellectual property rights notice. Here's a quick flash on last week's slide, which I called back to the basics because of all the tech madness that I was immersed in for weeks, endless weeks, it seemed like. And I guess the only thing really that I brought in terms of points were these final two, and just said, we are just going to go right to the charts, talk about things kind of in a stream fashion as they come to me, and then go from there. And I think we noted that there were some issues present, but there wasn't a crack. And we noted, especially in the IWM and in diamonds, they were looking a little bit rougher, and they were closer to cracking than SPY and QQQ, and just said remain on guard because, again, you really just don't know what can emerge these days. There's all kinds of things out there, and all the way from the old yen carry trade coming back with another problematic episode and just various things like that. Metals causing problems for certain counterparties and certain governments and all kinds of things. And then you add in Trump, who can make news with the best of them. And you really just don't know what will hit the tape next. So, despite everything really behaving fairly well, you just have to be prudent and disciplined, and that usually is a good policy in most times. This is this week's slide, and so I'm just calling it still easing back in since I am, and I would say that I'm still not where I want to be. I've got to decide on how I'm going to approach getting a few more things up and running, but overall things are still pretty good. And I just want to go through this stuff really just point by point, and just so everyone understands it, and then we'll get right into the chart. So this is a brief, and that little play on words relates to this graphic for all of you folks that like the old movies, relatively old movies at this point. There's Brian Doyle Murray with one of his favorite scenes from Caddyshack, which again gets to brief. If you know what's going on there. You know what's going on there. You watched Caddyshack way too many times when you were a kid, just like me. Anyway, I found out that the AAII bear number really in the survey spiked pretty significantly. So it's not really super jam, but given where the market is, it's really come on strong in the past several weeks. So I would say that could thwart the seasonality. The seasonality suggests that we should be swooning a little bit, should be swooning soon. This should really happen in mainly like after Q2 EPS, the back half of August into September, and things are rough, and then they get sorted out and you start to come back towards the end of the year. And so that seems to be ahead of itself in terms of that overly bearish mindset. So it's not super high, but it just isn't low, right? Given how well the market's performed with a new all-time high. So that could help, of course, right, due to its contrarian nature. That could really help buoy things, as could the NVIDIA EPS buoyancy that we've talked about before, where a lot of times the gang does not like to let this market drop until NVIDIA has spoken. Plus, not too long after NVIDIA, you've got the Apple event they could get excited about. So some things out there, and that's why seasonality, right, is not something that's just written in stone. I think it's good to know about, and sometimes we really track closely. This year we have tracked, I'd say, fairly closely, in my opinion, but it doesn't really always have to track perfectly, and of course it doesn't. So just keep that in mind. So what's likely to happen in, let's say, in most years, or typically does, there's maybe a few reasons why it won't. Is all I'm really adding to there. The gang lifted the IWM and the diamonds away from those potential danger zones. I'll try to show that. Once again, breadth and sectors are not perfect. but they're not disastrous either. So there has been a little bit of a loss of some steam here and there for sure, but the def rotations happen. And that's just a reference to 5 weeks ago when we talked about how they could really, there's been a lot of rough stuff under the surface for some names, but we talked about Amazon, Apple, Google really looking primed to want to try to do something to the upside. And they were, a lot of them were kind of like left for dead or not really doing much. And then they started to come to life. And obviously with those big weights, as we talked about, that's really helped keep things on the positive side, and help push us to do all-time highs. So that was highlighted, I would say, about 5 or so weeks back in time, and maybe a little more, I can't remember. Anyway, I'll look at these charts for us. I mentioned one on cocktail hour. I think maybe mentioned both. I can't even remember. It's been that kind of a week. I'll talk about these stocks in terms of some of the hits we saw. I'd say that right now you've got some false breakout risk in all 4 of the major index ETFs. And so the question that follows is, are we just going to need to convert the new all-time highs to real new all-time highs that are on their way to being taken out in the future? In other words, will the former all-time highs need to be tested on a pullback so that they can provide support, or somewhere near there does, and then we lift again and start challenging the all-time highs we made this week? I mean, that's pretty much been the pattern. On a side note, the public is supposedly back in a very big way, and supposedly what we've seen lately in terms of the month, I believe, is the result of institutions have apparently really gone bonkers in terms of the inflows. So it wasn't the month, actually, I think it was for the week. So this is one of the largest inflows that we've seen, let's say, in a week's time by institutions, and the public is also going gangbusters. So, should scare you a little bit that almost everybody seems to be in agreement. But that happens at times, and things continue to run. So some measures, though, have this as the most crazy priced S&P 500 of all time. One of those is the price to sales, which refers to the 12-month trailing, or trailing 12-month sales. Basically, right, that's at an all-time high. So to say that maybe the market's gotten a little ahead of itself may not be right, a crazy statement. And I guess there's going to need to be proof that the market's sniffing out this really wonderful development economically that we're about to enjoy. Hopefully the market's right, but there's a lot of pressure clearly if it isn't, given how far they've pushed things. Let's go back to the laser pointer. So I'm going to go back into the charts. We're not that far away from cracking something. At the end of this week, it's kind of been a little bit of a disappointing ending after a decent sort of midweekish performance, and it just wasn't. They were not able to really follow through much beyond that. So I would say right now, if you ask me where are we, which is a question I always ask and say that's what we try to answer, in my mind at least, right? Not every time on the video, but I'm always thinking that, like, where are we? And I think we're at an advanced rally stage, but we haven't faltered, right? So it's a lot like last week, as I talked about the seasonality already, and now we're going to go to the chase. And the chase is that the chase might be in stocks. And that's what leads us to our bottom line game plan, where there may be a lot of chasing that happens. We have to continue to go with it as shorter term traders for most of the stuff that we do in the market rebellion services. If we do have the seasonality sort of maybe induced pullback, that maybe over the next, let's say 6 weeks or so, it happens at some point. If that's mild, then this is something I think Jeff mentioned in speaking with one of his guys on cocktail hour, that you could have the elusive blow off, melt up into the end of the year. And that is what I mean by the chase, because I think what's really helped this market is a lot of people got shaken out or thought that sell-off was legit, and overdue, or whatever the case may be, with all the tariff sort of the tariff confusion sort of hitting the fan. And they may be right in the end. I guess we'll see. They may be wrong in the end. I guess it's not completely written yet. There's certain major countries that they haven't worked things through with, apparently. We'll see what happens with that. Maybe it all works out. But anyway, the point is that left probably a lot of folks underinvested, and we've talked about this, and we've been trading off of it for months and months and months now. And if they don't get the entry at a lower level, the big entry from a really significant pullback, they're really going to be in trouble if they continue to push this market, right? They're almost going to be forced to capitulate and buy into year's end. I've seen it happen many times. So it might even make less sense to you that what's happening in this market, and you don't see how, given how maybe inflation isn't completely under control, and given how the numbers aren't stellar, how in the world is this market doing this? But as I always try to remember to note, I would say there's a lot of sort of game within the game stuff that the news, the so-called media, doesn't cover. They try to attribute everything to this, that, or the other thing. And really, sometimes it's about how people are poorly positioned or underpositioned or overpositioned, much like a short squeeze, right? Where people just maybe overextend themselves and they get a little too comfortable, and then the stock starts going up, and it turns into this sort of situation of its own that becomes divorced from, really, for a short period of time, it becomes almost completely divorced sometimes from the reality of the stock's, let's say, future income stream, right? Their future income stream. So or valuation, whatever you want to call it, the true value of the company. So it happens, and that's part of that type of thing happens in the markets all the time, and I don't think they're given enough credit. Now these people these days do talk about gamma squeezes and things like that, and short squeezes, but there's more to it, clearly. So it is what it is, and they might not ever talk about it because maybe it doesn't really sell in Peoria to the casual viewer, I guess. Anyway, closing thoughts are, Trump's penchant. I've talked about it a gazillion times, mentioned it earlier. I would still be this way, and I'll think I can show that in the charts too. So let me let's hit stop share briefly, and then I'm going to rework things so that Brian Doyle Murray isn't, and Ted Knight, who I just think is what a great comedic actor he was. Ted Knight, that is, just so funny. Anyway, I think he's the true star of Caddyshack, if you ask me. But anyway, this is a stock that I did mention. I want to make sure that it's showing. Let's see, it's showing the right screen for me here, and it is. So I will mention this while I'm at it, but because I don't want to forget, I'll come back to all those stocks too and some of the UOA. But what I was getting at with this stock on Cocktail Hour that Ryan flashed briefly, if you look at this, this stock, you can see that really the SMH didn't really do anything all that spectacular. I don't want to have to go in and bring that up, but it really wasn't like this incredible week for SMH. It popped and kind of came really back to where it was on Monday, which wasn't that far removed from where it was last Friday. So SMH really didn't have the spectacular week that I'll show it, even though I said I wouldn't, but it didn't have the spectacular week where you look at there's Monday. So here's Friday, 293.53, and you're up small and just kind of ended with a whimper. But this one's showing some nice strength despite that. It's this Tempest AI. And I just think if you look at slightly bigger picture charts on this one, this would be one. I'm mentioning this because I think it's short term overbought a little bit. So it's maybe not an immediate thing, but I just feel from looking at these charts that and the way this thing's behaving right now, that if the market does get its act back together quickly, this thing is on the verge of taking out the highest highs we've seen all the way back to the start of the year. So if it can clear that and start working its way back up, it could really start attacking some of these higher levels, and that would be a nice little trade in there. So just wanted to mention that since that's where we ended up. But I'll go back to SPY as our starting point, and I'll just kind of bring the chart to where it is nice and large relative to these basic indicators you've got over here. And I think everyone can see that. And let me just get out of the time axis, price axis percentage. If it stays that way, I don't know though. But this is what I was talking about drawing lines last week, that if you wanted to do that. And so this is hard when you're going counter trend. And so this is where you are in terms of right. If you want to take a short against the grain, completely counter trend, type of trade because you think there's going to be a little bit of a swoon, and I would expect that swoon to come back should it develop to those rising SMAs, which are the 10, 15, and 20 in white, red, and blue, respectively. So that would be a little bit of a pullback. I even have a trade in there from UOA that has just for this kind of reason and even beyond if something develops. But while we're here, right, let's take a look at this. And could we call this a potential false breakout? And the answer has to be yes, because, right, you didn't just continue to go, right? You pushed through, you hesitated, you came all the way back to where you closed really on Tuesday practically. And now, right, do you come back a little further and try to convert these former highs right here near, let's say, 639-ish? You come back a little bit more and touch those or find maybe the 10 SMA or something like that, just to prove that, right, you're going to hold above there and start to go again. That is obviously one scenario and we've talked about that, I don't know how many times since they put the bottom in and they went. And it's been really impressive. And I continue to think that it's, in some ways, to me, this is very optimistic and out of touch. But that's why I go with the charts, and because the charts, that's really what matters. That's really ends up. This is what keeps score, and this is really what the marketplace thinks, right? As in terms of the market mechanism. And so it may be dead wrong, but that's we all know it's very hard to fight against and a lot more fun to go with it. So they've done a tremendous job now, right? What do we get? And so you've got to be on guard, really, to me, if you fall below the 20 there in blue. That's the level that I think starts getting dicey. Having a little bit of a pullback after the latest pop, and you could see I put my counter on here. I try to make these things a little less busy, right? This chart a little, try to keep it less busy with all the junk that I like to look at. I don't look at, by the way, I don't look at every single thing on, I don't look at every single thing every time. I just like having them there for when certain reasons develop that I like to reference something without having to always add the indicator. And so I've just trained myself to look past how busy everything is and focus on what I need. So I know if you're new to this stuff, it might seem busy, but it's really not that busy when you get used to it. And I just been doing this for so long. But anyway, so that was the 8th day in a row of what I would call bull control on Wednesday, which is not crazy in terms of bull market behavior, right? I've seen where it's gotten, I think, into the 20s of bull control. That actually happened at the end of a year where they were in markup mode, and the start of a new year where they were just in squeeze mode. But this is a good run. In fact, right, that bull control for 8 periods is probably the longest, the way that indicator defines it for me, since the bottom got put in, right? So you could say you're getting a little long in the tooth, and then you get a little bit of that kind of behavior, right? So now you're looking at like, okay, there could be a quick little failure scenario here, because if you take out Thursday's low, then you could, if you took out Thursday's low, you could start to back up a little bit further, right? That would be the first sign. In fact, I think that's the trigger for the counter trend idea that I've got in UOA Pro right now. But anyway, you've got to be on guard for that. There have been some signs of things aren't so wonderful. uh, across the board. But let's jump over to the two from last week that were more of a problem, which were IWM and the diamonds. And IWM, if you remember last week, it was left here on that particular day right there, unimpressive given what Qs and spiders were doing, right? How they were looking towards last week. And what really ticked me off for this week was I almost had this because it was so cheap to trade. And I thought it could either, break down to the 200, which would have been a nice move, or they could squeeze it back up towards these highs, and who knows. And I barely missed the cut as to one of our Rebel Pit Pro names. And of course, I was kicking myself because Ryan didn't feel well. We didn't have as much time to discuss it. And I knew he was just like, we got to get this out and done. I just don't feel well. So I'm not blaming Ryan, of course, but I'm just saying we had to do the expedient thing because of how Ryan was just under the weather. I didn't feel great myself, to be honest, too. But so we got some good names, fortunately, for the week. But yeah, this is just barely missed our cut. And they put a really nice rally. So they rallied together. So they pulled that away from sort of like that danger zone where, if you fall below the 50 right there, that starts to get a little concerning because then you only have like the 200 to go right there. These are still, which probably still provide support, but most people key off of the 50 and 200 with the 100 coming in probably in third place in terms of reading what's going on with some of those longer term SMAs. So anyway, that got taken away from the danger zone. So right away, some of that mixed messaging stuff was gone. And the same thing happened in the diamonds where they had a pretty good week, right? So this is almost sort of part of the rotation too, where you can see that, SMH didn't really we already saw that SMH didn't have a great week in the end, but they moved up the diamonds and they moved up IWM. So they've got more participation here. So that's why you really can't say that the week itself wasn't a solid week, I think, because they did pull other things up with them and quite repaired it. So now you're further away in my book, right? You were left back here really kind of floundering, not too far from the 50, not too far from losing support beneath the lines we drew here and in IWM, and they took it right away from there, right? So now you're at a higher level. To fall back to the SMA would require a lot more drop, right? So that would be one of your key signs of cracking, and you just don't have it. You just, that's the way I look at that right there. If you wanted to get short, right, because you feel like we're overdue, again, this is what I would do. If you really want to find aggressive stuff just in a simple way, I think right there is pretty much your support line. That's your first one. That's the first one I would draw right now anyway. That would open it up to the next one down. And then that one dovetails with the SMAs that are right there. And then the next one really becomes a 50. And that's really how I would rank those in terms of like first, second, third levels of support. So first one's going to be really, let's say Friday's low, right? If we fall below 448.97, that's at risk. Then you come down, let's call it the 20-day. That's going to come in, and I've got something in the way of that, which is the controls for, the next one down will be the 20-day on that. So that would be 440.454, and then finally the next one down from there is the 50, which is at 439.02. So those are your support levels if we crack, and if we don't, right? Then if you don't crack, just look how close you are. You have a rough candle today, but you've got this inverted head and shoulders in diamonds, right? And they pull it back from maybe possible short-term trouble, and they work it right back up, and you make this new all-time high right here, right? So that's that's a pattern that if it launches could really send this thing going. So I do think that's the thing, that you got to stick and move, but there's real potential here. Again, Jeff had that comment, and I think it's good. It's a good early comment to make here in August, to just kind of keep that in mind, that despite this, that, and the other thing cropping up, that if the market doesn't care and we don't really react, and the market there's too many contrarians out there and too many people that are underinvested, too many chasers, which is why I use the word chase. This could turn into one of those blow-offs. I'm not going to say you heard it here first, but I'm just saying I'm part of that if there's an emerging sort of choir on that or chorus, I would say, right, there's that could happen. I mean, I've seen that before when they really have this sort of sharp reversal, and a lot of people have uh, been calling BS on the whole thing, and they may be right ultimately, but in the long run, they may have waited too long, and they may have persisted in calling BS for too long, and you could get that. It might, if you're new to this stuff and you're thinking, how is this even happening, and this is ridiculous, you might not even be wrong yourself. It's just that this is what I mean by the sort of game within the game. And so I've learned the hard way a long time ago that don't fight against it, and even better, go with it. Because if you don't, right, if you don't go with it, you miss out on a great opportunity. The key to me is just not leaving it where you can give it all back. And that's where the position management comes in, where you just roll. I did a lot of rolling this week on some good moves. And then because I saw things not continuing, I closed things out. And I did enter a couple things late here on things that were performing well for the week, where they're showing me something going into the weekend. But a lot of things I just shut down and reduced my risk. But my plan is to get back in on certain metals names. Like I've been long HL and CDE, and I closed them out, fortunately, at good prices and stuff like that. And I haven't gotten back in those. I did move to other things in the space that look better at the moment to have some exposure there. And I did I do like that TEM that I talked about, but I'm really small there right now. I'm waiting for next week for that to break out. If it does, then I'm going to go in there, with a lot more aggressively. Anyway, we have not covered the Qs, and the Qs have a little bit, right? They kind of had a little bit of a nice little 8-day streak of bull control. And that, finally broke, and they came back to where they broke out from, right? So now they're really undergoing the test of, are they going to be able to convert that former high to support, or will they put a little, which again, you have to kind of build into your trading, that if they take it down into these SMAs and then reverse it, that makes it look like this isn't holding. They draw some more fresh shorts in, and then they start lifting from there. That's a lot more probably intriguing to our friends that like to create this, that, and the other thing within the markets. But that would essentially still, if they whipped it back up again, that would still really be an effective conversion to support now. And people would expect this to be supportive if we came back there again. But in the future, anyway, to step back a little bit, right? What's really happening here, and what's really happening is that we are. You can just see, right, that these SMAs is a really one good reason to keep them on your charts, even if you're not big on using them in different ways. Like I'm not, I'm really not, but you've got a great situation in terms of they're all positively sloped, and they're all stacked in terms of the shortest is above the next longest, which is above the next longest, and so on and so forth. So it's really doesn't get better than that from an SMA profile. You might say, well, I don't like that it's so stretched from the 200-day. Now, that's a good argument to make, and there's nothing wrong with looking at it that way. But going to here, like these Bollingers, I think I left them on 2. Yeah, the Bollingers are on 2. So even based on just a simple 100 period spine for those Bollingers, you're not even anywhere near there. So you could say, well, what about, the RSI reading of this and that? And some of them are getting up there. I think you've got a little bit of I think the monthly RSI on this is in the 70s, but it's in the low 70s. So it's really not that high, right? So I don't think anything crazy in terms of stretch is here. That's why, to me, I'm not even saying like, okay, this has gotten just utterly ridiculous technically. It's really time to look at this kind of a line and get aggressive about being a short player. Like I really can't wait to short it. I mean, I think there could be a trade in there. I just don't think it's something I'm salivating over. You might say, well, why would you put that in the spiders? You have to, right? So I'm the main person looking at this stuff because Ryan doesn't have time, just like I don't have time to look at all the stuff Ryan's mainly focusing on. And so I have to have those ideas in there because folks need to be able to go to some sort of a bearish idea, which has been very hard to come by in this environment, as you may expect. There just haven't been that many bears. And why would you want to focus on trading a ton of bears anyway, when the market's behaving so well and so many stocks are doing well and there's been really nice moves? So I try to keep it balanced, but when you have such strong trending action, you're probably hurting yourself by trying to keep a balance, even if you could, because really, three quarters or more of the really good action is going to be on the bull side. So that's where we kind of heat seek for that, to use that expression. We try to go to where the action is and get folks involved in it with good ideas and hopefully good timing, good levels, and all the rest, good strategy selection. But yeah, if you wanted to fight something, there might be a little fight here. I would say that even if we do have massive overvaluations and things like that, and you're right, and there should be this great crash or whatever. You've got this great case you can make. I would say, yeah, but it's going to take. It's not just going to happen in a vacuum. Technically, you're not going to see the market just start getting annihilated lower on technicals, right? There will be news drivers for that, and you will, in every case that I've been through, there's been a news driver, maybe not at the very tip top or maybe not at the start of the descent, but ultimately something comes out that the market can at least use to hide behind to justify heavy selling. A lot of times it's legit, there's legit problems. So that's what's missing, right? There's nothing that's broken that way. I do think something could break that way. It's been a long time, but I also feel like we lived in times that are really much more managed than they once were. That's at least my perception. Whether it's true or not, I can't say. But I feel like a lot of things are just managed. There's not as much just organic happenings, if you will. But overall, right, you're stuck in this up sloping channel, and you might say, well, we're due to cycle lower. You might be right. But again, I would say that, look, these SMAs under normal conditions and normal news, the SMAs are just waiting to catch the name, catch the cues here. So we did see, and I'm going to go into this. Let me get the paper brought up now. Let's diverge into that, which should be right here. And what I wanted to bring up, I may as well talk about this BMNR since we're here right now. But this is another one that I would keep an eye on as a possible trader. I was astounded when I saw the potential in the chart combined with the cost of the option. So let me explain what happened. So I saw these hits back in here, late July and this one. And in both cases, when I had an alert set, and the stock, or I should say, whatever, whatever you want to call it, this instrument, right, this issue, made such a strong move. By the time I could get a chance to look at it, it was so far beyond the alert level. And I was like, what the heck is going on that it moved so far on me? And I felt like, how can I put an idea in now? It's so far beyond where the UOA appeared, right? So I was a little frustrated by that. So I kind of made this, especially after this one right here on 8-6. There were some technical problems, as you all know, that were occurring, as well. It made it hard, but I that probably played into it on the first couple. But on this one, I was like, I'm not doing it. I'm just getting this idea in directly. Right now, it's getting put in, even if the trigger level's 5% away, because I want folks to be aware of this, because I really see the potential here on the charts. So that's what happened on 8-7. That was, I guess, last Thursday that came in. So anyway, that's what happened. We got it in this particular day, I believe. And then 8-7 is right there. on, I'll bring the idea up. This was the original idea, and the stock was at 41. And we went with these Augie, these the regular expiration Augies, and we went with the 42 calls, which were slightly in the money. They were in the money by almost $1.50. So in terms of the extrinsic value, you were only paying about 2.25. And I looked at it and thought, this is really not that bad, because here's the 42s. You're in the money. You're paying 375 for them, and I thought that is really not that bad because of the chart potential that was there. And I kept looking at them like, is that really right? Because that just seems way too dollar cheap to me. To way too dollar cheap to me to for what kind of potentials here, right? That was on 8.7 right there. And I'm like, this is a really, there's not a lot of data to work with, admittedly, but really it was a nice setup technically for what we did have in place, I thought. And lo and behold, right, the UOA appears, the technicals are there lining up. And I'm thinking, why is this this is like less than a $4 call? What the heck? Because I could see that this thing, the way you all know how this space can get going. And I thought, my gosh, like this thing could really go. And it did trade up to 71, 74 from a 43 trigger just in a few sessions. So this is one, in my opinion, that I would tell folks to keep an eye on as a possible trader, because when they get a hold of this thing, it can really go. And you're only paying, you were for a week out, you were only paying less than $400 a contract. And so it just shows you, I mean, I guess we bought the 42s, right? So that 42 at the high, it was almost $30 in the money, and you paid less than $4 a contract for it. So I'm not saying anyone sold at the top, but I'm just saying that kind of potential is very strong, in my opinion. So I just wanted to note that, because that is worth. We talked about, I think last week, that crypto did seem like it had some positive things happening there. Keep an eye on Bitcoin or whatnot, which may have done. I didn't even have time to look at Bitcoin that much this week, so just wanted to mention that. Now, another one that we had was, I want to mention all these, and I'm going to just go through the UOA. But we had an Apple trade a couple weeks ago, and they came back. They're coming back and they're buying more, right? So it looks to me like, Apple, after a nice run, seven sessions in a row where I would say the bulls were in control, it finally took a little bit of a breather here, right? So, but now it's above all the SMEs. The short terms are crossing above the 200, starting to anyway, and that long-term sort of resistance that we talked about 5-6 weeks ago, roughly, that is being addressed, right? They took that out, and now they're up. They're up. They got through the line. I'll make it blue that we had in place, and now they're up in here, and you can see where they could start working this back up. So they came in before. They were right to come in and buy. We did just see more activity that way. Let me try to get that pulled up. Where would that be? Right there. So let me try to get us the Apple. I'll pull that up for everybody. AAPL. Why is that? There it is. So yeah, this is a pretty large hit. Could be right where it was this bullish roll ostensibly in Nove. They moved up after the run it's had. They moved up 20 their calls $20 further, but maybe they just like to, if they anticipate a short pullback, they'd rather still be in it. They don't want to see news drive it and then not be in it, and they're kicking themselves. But maybe they want to take a little off the table for now and still have that long, and they're still expecting, a big fall out of Apple. Maybe just thinking out loud here, but they came in for that. And my point is, right, that if they get Apple going again, or I should say, can they keep Apple going? And then, of course, NVIDIA, which I think is the biggest of all dogs, We just got this one to hit, right? So I got this one in. And you could say, well, these could be hedges because look how far out of the money. I'm not arguing with you. They could be. I mean, I don't think they are. I've seen this too many times, but you just never know for sure. I've seen these out of the money call buyers strike gold, big out of the money call buyers strike gold in some of these big names so many times that I don't necessarily think that these are definitely hedges. But that's right, obviously EPS inclusive right there. And then we had to kind of balance this out a little bit. We finally did have, which I got in an idea on this one. We finally did have some bearish activity, ostensibly bearish activity anyway, set for early to mid set. I guess more or less mid set. But you can see this is the first thing we've had in here, right, on the bear side in quite a while. It's been a few months. So that's the first bearish thing that showed up in a while. And then we haven't had a VXX hit all that recently, to my recollection, unless I'm it's getting lost. And yeah, a couple months ago. So there's another kind of, well, it's bullish in VXX, but ostensibly, right, that would be a bearish take on the market if they're legitimately buying calls. So those are far out, but just saying, you finally have someone show up. You haven't had a real player in a few months in there as well, and on the call on long side of calls. So just wanted to share that because that's sort of starting to percolate a tiny little bit there, and I just wanted to note that for everybody. Now let's go back to where we were. So let me try to go back to the charts. I think what I'm going to try to do here is show our sectors. And you'll see, I think, why this was not a terrible week, but nor was it a gangbusters week, where you could see that, the communications have done it again. We continue to look to them for leadership. They continue to provide it for the most part. You did have a little bit of a, much like SMH, XLK trades, a little bit of a back off there, a little bit of a kind of like a false start a little bit there in XLE. That looked like it was ready to maybe do something and pop a little further. That kind of got halted in its tracks and just tamped down. But so that's kind of a nothing week there. This is a nothing week in XLK, nothing special. XLC, pretty good. Financials, right? They worked their way back up, had a rough Friday. So that's a little messy. Real estate, defensive, nothing special happening there. XLV got walloped, so you have the natural right springboard back that these guys engineer. I'm not reading too much into that. Staples, it looks like a little money comes out, but a little bit of money goes into discretionary, right? So that's usually a good sign where they're getting more aggressive. XTN had a decent little recovery after threatening to get even more ugly, much like IWM, much like diamonds. It was looking pretty rough as you were heading into last week's close, but they levitated it right back up out of the danger zone for now. And then you had your kind of decent little performance from XLB, XLI. What do you call it? What are you going to say there? Nothing special, not a great close, right? So, and XLU also not a great close. So not really that special of a week from the sectors, but also not a disaster. And this is more risk on, and this is a good sign here to go along with XLC. So XTN, XLY, XLC, all kind of helping to get it done. The other ones, spotty, nothing great, but nothing really disastrous either. If you go look at market breadth in a simple way that we tend to do it, just to get a glimpse of what's going on, that should be over here, probably hidden behind this one. And it is. And I'm going to push this over to, just so no one gets confused. These are not based on the Apple symbol, but here's the SPY. And you can see that if you look at it, right, it kind of was all going fairly well for market breadth all the way until that Wednesday, the 8th day of bull control. In the last couple of days, you could see maybe there was some profit taking, but so you didn't end the week on a price action basis with a stellar performance, nor did you end it in a great market breadth, but it's also not disastrous. So in the end, unless you have a really good reason why you don't want to, or you can justify it, you almost have to continue to give the benefit of the doubt to the bulls, because ever since, right, they performed that strong bounce, they've been in control of the market, and it's paid to really focus on that. And fortunately, that's what we've done in most of our ideas are by far, bullish ideas have dwarfed numbers, I should say, bullish ideas have dwarfed the bearish ideas in UOA Pro for wow, almost the whole time. So it just, that's one really good thing about UOA trading, is that, the stuff that's going to stick out, you're not going to catch them all, but the stuff that's going to stick out is going to be players that are moving bigger money, and they're trying to participate in, things that are going to work and continue to go. And that tends to support the trend, so I haven't seen that rash of put buying like in front of a rollover that we can see at times and all that. But as you just saw, I added that line. And so this line, we don't have any of the SMAs, but if you want to trade against the fact that you didn't get to the top of the channel or whatever your case may be, I would keep this line here. I would trade it. Really, you need something to trigger it. Probably have to use Thursday's low. Remember, you're trading counter trend. We do have an idea in there. You're trading counter trend, and that means, right, it's a hard slog, right? You've got to trade. You've got to get in quickly. You can't give up too much of the drop, and you got to get out quickly if they start working it against you. And even if it does go your way, you probably have to be a trimmer and a roller more than you would on the bull side, because the trend is clearly against you. Well, almost every trend is against you, right? Intermediate, certainly, and excuse me, and also long term are clearly against you, right? So there's all that. So that would be my take on it. I think you just continue to go with it. You continue to be smart, continue to be disciplined. You roll like I did. I rolled, and then at the end of the week on some things I closed, and these things are working. But I felt like they got a little ahead of themselves. And if I miss a little bit and I have to jump back in on Monday, I will. But overall, I think you got to continue to give the benefit of the doubt to the bulls. The bulls, they might end up really having a big score, but I think there is a scenario out there where so much of this could be based on people scrambling and chasing in the fall. And so at that point, you definitely have to, I think, roll towards the end of the year, if that scenario plays out, where if I'm going to stay in it as long as it's working, and you're holding above critical support levels, and you're staying above trend and all that. But yeah, you're just going to need to. I would just continue to roll, because until I start seeing more support for these valuation levels and some of the places they push things to, just really would. Excuse me on that. But yeah, there's really not much to write home about in other things. I mean, yields and dollar just kind of doing their thing. Yields and dollar maybe at a little bit of an inflection point. I'm not going to read into it yet. We'll give it more time. The VIX, trading near the year low. So I think if you wanted to start buying vol, and this translates into stocks you're looking at, and you really want to own yourself some out of the money butterflies or this or that, I mean, you're probably in a great spot to do that from a volatility basis here in August. I used to buy, a lot of people got overly bearish about volatility late in the summer, and would sell months that shouldn't be sold, in my opinion, like November and February and March. I wouldn't sell those, but some people do. And so when it gets that dirt cheap, I like to position it that way, and where I'd be long months that I think are good months to own, much like Monopoly, playing Monopoly. But yeah, I mean, I still think, it's not like you'd be crazy to buy some of these out of the money downside butterflies, but the vol timing is maybe pretty good, but the market timing, unless you're anticipating news, something hitting this tape soon, that's going to really roll it over. and that could happen. But unless you kind of have a beat on that, you're privy to something that a lot of participants in the market do not appear to be, then that's pretty tough timing, because you could see more appreciation, and it could take your great vol buy and wreck it, because we go up another 10 or 15% by the end of the year. If especially if there's this mild or lack thereof a pullback where people are like, damn, I can't even get in. And that's what really powerful markets have done in my experience, where a lot of times they're way ahead of themselves. They don't make sense. A lot of people that have qualms are right probably to have the qualms that they do at that particular time. But I just learned you can't expect the market to reflect all your qualms, when you want it to. And they just don't let people get in. And this market has just not let people get in that have been waiting for another pullback so far. And that when those people don't get let back in, it can become very forceful. So I don't want anyone to think that I turned like I'm doing consulting for Tom Lee or someone else that's got a permanent bull reputation. I'm just trying to lay out objectively what could happen and some things for us to think about. But for now, I would just stick with what we said. And all that really is just, you got Trump. Do not forget about Trump, and just keep using your levels. I mean, if you're not doing it, just get your 10, your 15, your 20, and your 50, at least on your charts. And those are good things to key off of as our former highs and, key lows, which we tend to cover. I didn't go into specific levels on everything here, but I just wanted to get this out again. I've got some things I've got to address yet again today and this weekend, which again, I'll discuss at some point. When everything wraps up, I'll discuss all this at some point. But yeah, anyway, I've just got a lot of things bearing down on me that I've got to take care of. But I do want to just say that things are looking really good. I wouldn't read into it too much. Trying to call these turns before they happen is really tough. There's a lot of little head fakes too. Even if you're right, you have to kind of live through a lot. So I would just insist on, a real break of something. That's my way of doing it. I don't like to, this is kind of where one spot where like Ron, everyone remembers Ron, he and I just sort of disagreed. I mean, as a market maker, I think it's a different story where, yes, you can position yourself way ahead of time with vol that usually pays off. That was where he and I agreed. Where I didn't agree with him was that you start doing it as a retail trader, because unless you've got a special kind of account, because you could have that scenario, and before right, his argument was, well, once it hits the fan, you can't buy it, it's too cost prohibitive. That was in a nutshell. I agree with that, but at the same time, you could make a case that things were maybe getting a little out of control in some people's minds. That was happening 6-7% ago. So yeah, even if you bought cheap vol and you get something that works up at 6-7% in your face, it doesn't matter because you're so far away, right? You might still have some value, but you've lost a lot because it's a directional play, like that you're paying out of pocket for if you buy these downside put butterflies. So you got to wait for something, I think, and it could be something really aggressive if you want that to be that, like taking out Thursday's low, and that you see a pullback starting, and it could maybe morph into something even more than just a garden variety pullback against some strong uptrends. It could happen, but you've got to have a rationale, in my opinion. You've got to have the technical breakdown first that looks imminent, and you've got to have, here's why this is going to turn into a bigger problem. And that usually means, reading the news tea leaves a little bit, where you think that if this starts happening, it could set things really start to impact the markets negatively. And I think we had that a few times on different things. Certainly over the years, there's been many occasions where we've had that. But I remember Ryan and I kind of warning about the COVID, what could happen there, when the market was ignoring it for a few months. And then finally, the market decided not to ignore it anymore. And that's been my experience. The market will ignore. And then finally there's recognition of something. And then, right, it's just like an all hell breaks loose situation. But until then, you can really get, you can really get chopped up pretty good if you get too aggressive as a short side player or long vol player, and the trend just continues to go up against you. So it's rarely easy in the markets. But I guess my reminder is with Trump, you've got a Trump situation, and I don't want to say that negatively or positively. I'm just saying Trump is what he is, and he's a newsmaker, and so he seems to like making news, if you ask me. And so you just don't know what is going to come next. And I think that's the reason for being disciplined and really maybe having some butterflies picked out or other things you like if you start seeing a break, excuse me, and if you see a situation where that news development could turn into something larger. So that would be my way of doing it, because I don't have a recollection really of that many overnight things that came out of the blue that just stung me and knocked the market down 5% and sent it into panic mode, where volatility spikes and you really have a hard time hedging at that point. It's if you hedge and it didn't matter, you're really paying a premium, and it can be painful to have done that. So, the timing is tough, but in either case, but I'm just throwing all this out there, especially if you're new and you're contemplating these things. But for now, I would just, as long as we stay above Thursday's low, I'm going to go with the flow. And if we get below there, I just expect some more corrective activity working its way back towards the 20, unless the news dictates that we go even further than that. And otherwise, just keep going with it, because they do have the NVIDIA buoy potential, and they've got the Apple just about 2 weeks after that. So they might not let this thing go. And you might have to, continue to hopefully profit on the upside. So on that note, I'm going to wrap up. I do hope something I shared with you as I re-immerse myself into the charts and the markets helped you out this week, or it will help you some week in the future. If you get this video early, wish everyone a really great weekend and a great week ahead. And thanks again for tuning in.